What if something unexpected happened to you tomorrow? Would your family be financially secure? It's a question that most people avoid, but the reality is that life can change in a single moment. Every day, thousands of families in America face financial struggles because they lose their main source of income unexpectedly. That's where life insurance comes in. It's not just a policy, it's a promise of protection, a safety net that ensures your loved ones are taken care of even when you are not around. Imagine knowing that your family could continue living comfortably, pay off debts, handle education costs, or even keep the home you worked so hard for, all because you planned ahead. In 2025, life insurance in America has evolved to be more flexible, affordable, and easier to understand than ever before. But still, most people don't know how it really works. So in this video, I'm going to break it down for you in the simplest way possible. By the end, you'll understand exactly how life insurance works, what types exist, how to choose the right one, and what changes you should know about in 2025 before you buy any plan. Hi everyone, welcome back to the channel. If you're new here, I'm Smith, and I help people make smarter financial decisions that secure their future. Today's video is a complete guide to understanding life insurance in America. Whether you're just starting your career, supporting a family, or planning for long-term security, this video will help you figure out exactly what kind of policy fits your needs. We'll talk about the basics of how life insurance works, the different types available, the benefits you can expect, and even some insider tips on how to save money while getting the right coverage. Life insurance can seem confusing, full of complicated terms and numbers, but don't worry. I'll make it easy to understand, step by step. So make sure you watch till the end, because by the time we're done, you will have a clear idea of how to protect your family financially and make confident decisions about your future in 2025. Life insurance is, at its core, a simple concept. It's a contract between you and an insurance company. You agree to pay a certain amount called a premium every month or year, and in return, the company promises to pay a large sum of money known as the death benefit to your family or chosen beneficiary if something happens to you. This amount can help them cover daily expenses, pay off debts, handle funeral costs, or even secure their long-term financial future. Think of it as a financial shield that protects your loved ones from the uncertainty of life. For example, if someone pays just $30 a month for a $250,000 policy and something unfortunate happens, that small monthly payment ensures their family receives $250,000, enough to keep them stable during a very difficult time. In America, there are mainly two broad categories of life insurance: term life and permanent life. Term life insurance is the simplest and most popular option. It covers you for a specific period, usually 10, 20, or 30 years. If you pass away during that time, your beneficiaries receive the payout. But if the term ends while you're still alive, the coverage simply expires. It's affordable, straightforward, and great for people who want protection while raising kids or paying off a mortgage. On the other hand, permanent life insurance, which includes whole life and universal life, lasts your entire lifetime. Whole life insurance not only gives you lifelong protection, but also builds something called cash value, which grows over time and can be borrowed against or even withdrawn later in life. Universal life insurance is a more flexible version of that. You can adjust your premiums and coverage as your financial situation changes. It also has an investment element, allowing your policy's value to grow depending on market performance. These permanent plans are usually more expensive, but they offer additional financial benefits beyond just death protection. Now let's look at how the process actually works from start to finish. The first step is to figure out how much coverage you need. This depends on your income, debts, dependents, and financial goals. A common rule is to choose a policy worth 10-15 times your annual income. Once you know your amount, you apply for coverage, usually by filling out an application with personal and health information. Some policies might require a basic medical exam, while others, especially newer tech-based ones, use your digital health and financial data for quick approval. After your application is approved, you start paying your premiums regularly. As long as you keep paying, your policy remains active. If you pass away while it's active, your beneficiary contacts the company, files a claim, and receives the payout, often within weeks. Several factors affect how much your life insurance will cost. Age is the biggest one. The younger you are, the cheaper your premiums will be. Your health and lifestyle also matter. Smokers, heavy drinkers, or people with risky jobs or medical conditions will pay higher rates. Gender, location, and the type of coverage you choose also influence the price. For example, a healthy 30-year-old might pay only $25 per month for a term plan, while a 50-year-old might pay $100 or more for the same coverage. That S smart to start early, locking in lower rates while you still young and healthy, can save thousands over time. As we move into 2025, the life insurance industry in America is changing rapidly. Many companies now offer online applications that take minutes instead of weeks. There are hybrid policies that combine life insurance with long-term care coverage, helping you prepare for medical costs later in life. Artificial intelligence is being used to analyze data and approve applications faster, and digital platforms allow you to manage and track your policy online just like a bank account. Younger generations are showing more interest in flexible, customizable plans that fit gig workers or freelancers rather than traditional long-term policies. However, despite all these improvements, many people still make common mistakes when buying life insurance. Some choose the cheapest plan without reading the terms, only to find out later that it doesn't cover what they expected. Others forget to update their beneficiaries after major life changes like marriage, divorce, or having children. Some even cancel their policies too early because they think they don't need them anymore, losing years of financial protection and benefits. Life insurance is one of those things that seems optional until it's too late. But the peace of mind it brings is truly priceless. By understanding how it works, choosing the right plan, and avoiding common pitfalls, you can make sure your loved ones are protected no matter what the future holds. To wrap it all up, life insurance is not just a financial product. It's a commitment to protect the people you love most. Whether you choose a term plan to cover specific years or a permanent plan that provides lifelong protection and cash value, the key is to pick a policy that fits your needs and your budget. Remember, the earlier you start, the more affordable and effective your coverage will be. By taking the time to understand how life insurance works, you're giving your family financial security, peace of mind, and a safety net they can rely on no matter what happens. Don't wait for the unexpected to happen. Start planning today, explore your options, and make a choice that ensures your loved ones are protected. If you found this guide helpful, hit the like button, subscribe to the channel, and share it with someone who needs to understand life insurance in America. Stay tuned for our next video where we all compare life insurance in America with Japan and show you how coverage differs across countries, helping you make even smarter decisions for your future.